Dinar Exchange chronicles embracing financial flexibility amid economic shifts. Introduction: the global financial landscape is constantly evolving, requiring investors and businesses to remain adaptable. Recent developments underscore the significance of financial flexibility, particularly as economic and policy changes impact markets worldwide. Over the weekend, many expected redemption teams to be called in for work. However, no official notifications were received. Despite this, sources suggest they should remain prepared for potential weekend assignments. Meanwhile, interest from the United States in Iraq's financial sector continues to grow. On Sunday, Iraq's central bank governor, Ali al-Alak, met with Steve Lutz, vice president of the American Chamber of Commerce, to discuss strengthening banking and economic ties between Iraq and the U.S. The discussion highlighted American financial institutions' increasing eagerness to establish a presence in Iraq. Al-Alak assured that Iraq's central bank would provide necessary support to facilitate this expansion. As Iraq undergoes economic transformation, investors face crucial decisions about wealth management. Should they adhere to rigid, structured investment strategies, or should they adopt a more flexible approach that allows them to capitalize on emerging opportunities? This article explores the advantages of financial flexibility and how investors can position themselves for long-term success. Choosing the right investment strategy. Investment strategies can significantly impact financial growth and stability. Consider two approaches, one that locks funds into a fixed system with limited control, and another that offers flexibility to take advantage of new opportunities. A rigid approach may provide security but limits potential returns. In contrast, a flexible investment strategy, similar to navigating open waters, allows for higher returns and adaptability. Choosing the right strategy is essential for maximizing financial growth and ensuring peace of mind. The basket approach: stability with limited growth. A fixed investment strategy, often called the basket approach, involves placing funds in pre-structured financial products, such as mutual funds, fixed-rate savings accounts, or long-term bonds. While this method offers stability, it comes with limitations. Restricted growth. Fixed investments typically yield lower returns, as they do not adapt to market fluctuations. Inflation. Risk: locked funds may lose value if inflation outpaces returns. Limited liquidity: investors must wait for the maturity period before accessing funds, making it difficult to take advantage of new opportunities. While this approach provides a predictable structure, it may not be the best choice for investors seeking higher growth potential and flexibility. The floating approach: maximizing financial flexibility. A flexible investment strategy allows investors to adapt to changing market conditions. By diversifying assets, including stocks, bonds, real estate, and even cryptocurrencies, investors can maximize returns and mitigate risks. Benefits of a flexible strategy. 1. Higher growth potential. Certain financial markets, such as foreign exchange, offer opportunities for exponential gains. 2. Quick response to market shifts. Investors can swiftly adjust their portfolios when assets underperform. 3. Diversification. Spreading investments across multiple asset classes reduces risk and enhances stability. 4. Active wealth management. Instead of passively waiting for returns, investors can strategically move funds for optimal growth. Rather than being confined to a rigid system, flexible investments empower individuals to make informed decisions, increasing long-term financial security. Psychological and emotional benefits of flexibility. Beyond financial advantages, a flexible investment approach provides psychological benefits. Investors who actively manage their portfolios often feel more engaged and in control of their financial future. Key psychological benefits: reduce stress. Knowing that investments can be adjusted minimizes anxiety during economic downturns. Increased confidence. The ability to make strategic financial decisions fosters a sense of empowerment. Proactive wealth management. Rather than relying on fixed returns, investors can seize opportunities for higher profits. By maintaining a flexible approach, investors can navigate financial shifts with greater ease and confidence. Implementing a flexible investment strategy. To adopt a floating investment strategy, consider the following steps. 1. Research investment options. Explore stocks, ETFs, real estate, and other diversified assets. Choose platforms that allow real-time monitoring and minimal transaction fees. 2. Build a balanced portfolio. Diversify investments across multiple sectors to mitigate risk. If one asset underperforms, others can Trump's policy shift, restrictions on US dollar usage in Iraq. In a surprising move, former US President Donald Trump announced new restrictions on the use of US dollars in Iraq. Under this policy, the dollar can only be used for medical-related expenses, such as purchasing medicine and medical equipment. All other transactions, including business dealings and stock market activities, must now be conducted in Iraqi dinars. This decision has far-reaching implications, affecting businesses, consumers, and Iraq's overall economic stability. Effects on daily life and business. One consumer impact: Iraqi citizens who frequently use US dollars for everyday purchases must now transition to dinars. This shift may initially cause confusion and economic adjustments. 2. Business adaptation. Many Iraqi businesses engage with international suppliers that prefer US dollar transactions. The restriction could disrupt supply chains and increase costs for imported goods. Third, stock market consequences. The Iraqi Stock Exchange, which has long operated with US dollars, must transition to a dinar-based system. This change may discourage foreign investors who rely on dollar-based trading. 4. Travel limitations. Travelers may still exchange limited amounts of US dollars for international trips, but restrictions could complicate foreign travel and tuition payments for students studying abroad. Iraqi government response and economic implications. This policy raises critical questions. How will the Iraqi government facilitate this transition? What measures will be implemented to stabilize the economy? How will businesses and consumers adapt to the new financial environment? Public reactions are likely to be mixed. Some may view the policy as a step toward economic independence, while others worry about inflation, limited access to foreign currencies, and potential increases in black market trading. Diplomatic relations between Iraq and the US could also be affected. If businesses struggle under the new restrictions, Iraqi officials may push back against the policy. Potential silver linings: economic growth and financial independence. Despite short-term instability, Iraq's shift toward using the dinar exclusively may yield long-term benefits. Strengthening the national currency, reduced reliance on the US dollar could stabilize the Iraqi economy. Encouraging local investment. Greater dependence on the dinar may boost domestic financial institutions. Reducing external influence. Iraq could gain more control over its financial policies and economic future. However, challenges remain, including potential inflation and the risk of an underground currency exchange market. How Iraq handles these challenges will determine the long-term success of this policy. Final thoughts: seizing financial opportunities amid change. In light of these financial shifts, investors must consider how to protect and grow their wealth. Moving away from rigid financial structures and embracing flexibility can provide a strategic advantage. By adopting a dynamic investment approach, diversifying assets, monitoring market trends, and staying adaptable, investors can navigate economic changes with confidence. Are you ready to break free from restrictive investment strategies and embrace financial flexibility? By taking proactive steps today, you can secure long-term financial success in an unpredictable economic environment.